Where did you stop in our last class? So where did you stop on our last class? Just respond with the yes on where we did stop. So where did we stop in our last class? Just give the yes very fast. Yes, professional framework. So we say that auditors professional framework, we basically talked about just note it, auditors professional, call it the professional framework. Auditors professional framework. So when you talk about auditors professional framework, we did say that there is basically regulation. When you talk about auditors, it's regulated. We say regulation, and we talked about regulations at 2 levels. Are we together? So in terms of audit profession, it's basically regulated at 2 levels. So when we talked about local, one was local, so what we call local, so what we call the national level. So whenever we talk about regulation at the local level, so the national level, this is basically done through the ISPAC. We have CASNEB, and what's called the Accountants Act. So when you talk about regulation, you're basically saying regulation at the local and national level. This is basically done through the ISPAC, through the CASNEB, and what's called the Accountants Act together. So then you have the second level, we call it international level, regulation at international level together. So whenever we talk about regulation at the international level, this is basically done by what we call IFSC. So what does IFSC basically means? It is what's called the International Federation of Accountants. Regulation at international level is basically done by IFSC, which is International Federation of Accountants. We respond with a yes. So what is IFSC, which you say International Federation of Accountants? IFSC, which you say is International Federation of Accountants. We basically call it international. It is international. We call it non-governmental. Look at the word. We have it non-profit. It is international, non-governmental, non-profit. Whose members, the keyword whose members, we say whose members subscribe to what we call to accounting standards. And we're saying that whose members basically subscribe to what we call the accounting standards. Whose members basically subscribe to what we call accounting standards altogether. We respond with a yes. So if you look at IFSC, which is International Federation of Accountants, which are basically says the non-governmental and non-profit, and basically the members basically subscribe to what we call international accounting, subscribe to what we call international just accounting, but they subscribe to what we call international accounting standards. So IFSC is basically broken to subcommittees. It's basically broken to what we call the subcommittees together. This is broken to the subcommittees. So if you look at these subcommittees, the number of subcommittees, we have one of it is IESBA. This is the first one, IESBA. We have the second, and we're going to talk about this. This will take, we are going to revolve around this when we're talking about ethical principles. We also have what's called IAASB. We have the next IASB. Then we have number 4, IPSSB. These are subcommittees of the IFC, which is International Federation of Accountants, to get a team. So I want to break it down. When I talk about IESB, what does it basically mean? So that basically means that when you talk about that, we basically call it, it is International Ethics Board, International Ethics Board of Accountants. So this is basically international, what we call the International Ethics Board of what we call of accountants. So that is what it means. So when you talk about IASB, we call it International Auditing and Assurance Standards Board. International, we call it auditing, and what we call assurance standard board. Then you say international accounting. This is international accounting, and call it standards board, international accounting standards board. Then this is international public sector, public sector. We call it public sector, accounting standards board. So that those are the meanings of those subcommittees. To get that in. So these are the subcommittees that are basically emanating from IFSC, which is International Federation of Accountants. You copy, are we together? We respond with a yes if we are together. We respond with a yes. So I want to break it down because we're going to talk about ethical principles, I want to talk about constitute ISSBA. So that is International Ethics Board of Accountants. International Ethics Board of Accountants. Are we together? So why was this subcommittee basically developed? This subcommittee, what was the need for this subcommittee? Which was most of our discussion when you talk about fundamental principles or code of ethics altogether. What was this mandate? Developing, the essence of it was developing and what we call enforcing code of ethics, and the essence of it, code of ethics for what we call the accountants. So the essence of this was basically to do what? IESB was basically to develop and enforce what we call code of ethics for accountants. Elijah together was basically to develop and you say enforce what we call the code of ethics, and you're saying that this code of ethics for account, that was the essence of that, to develop and basically to enforce what we call code of ethics for the accountants. We respond with the yes, Catherine, Chalo, Elijah, Emmanuel Kapi, on Tito. Perfect together. So that was basically the function of IESB, to develop and enforce what we call code of ethics for professional accountants altogether. So whenever we talk about code of ethics, or when somebody tells you code of ethics, what does it mean when you say code of ethics? What does it mean when you talk about code of ethics? So whenever we talk about code of ethics, acceptable code of behavior, this is acceptable code of behavior. Acceptable, we call it acceptable code of what we call behavior. Behavior, you say for professional, for what we call professional accountants. For professional accountants. So that is what we call code of ethics. Together, Doris, as we just get in our class now. So that is acceptable code of ethics or behavior for what we call for the professional accountants. So we're basically talking about principles that needs to be observed by what called by the professional accountants altogether. So if you break down codes of ethics, so the code of ethics are basically broken down into two. This code of ethics are essentially broken down into two. We have what's called the fundamental principle. We have what's called the fundamental, call it the fundamental principle. fundamental principle, and then we have what we call other principles. And then we call what we call other principles. Other principles together. So we have the fundamental principles, and then we have what we call other principles, or other professional principle guidelines, or other, we call it professional guidelines. Let me break it even much further. So when I talk about other professional guidelines, we're talking about how do we charge fee? How does auditors basically charge fee? How do you accept clients? What is the procedure? In terms of advertising, how should auditors basically carry that together? Remember, on our first discussion, I basically talked about an accountant. An auditor is an accountant, but an accountant is not an auditor. Are we together? An auditor is an accountant, but an accountant is not an auditor. So I start with what called fundamental principles. I start with the first one, fundamental principles. And I want to come up with an abbreviation on how to remember these fundamental principles. So when you talk fundamental principle, the word is simply abbreviation, we call it OPIC. Tunaziita OPIC. Tuko pamoja? How do I remember fundamental principle? They're called OPIC. O stands for what we call objectivity. Objectivity. P stands for professional behavior. Professional behavior. P stands for professional behavior. Another P talks about professional competence. Then I stands for what we call integrity. And lastly, we have C, which basically means confidentiality. So team, when you talk to basically break down what we call the fundamental principle, you only need to understand the abbreviation that I called OPIC. So that is objectivity, professional behavior, professional competence, integrity, and what's called the confidentiality. Can you remember it through this abbreviation? I hope you can. Together. So I start with the first fundamental principle. I start with what's called the first fundamental principle. So the first fundamental principle is what Mwalimu says is integrity. Are we together? The first fundamental principle that we talk about is what Mwalimu says integrity. Integrity. The first fundamental principle is what's called integrity. So the first fundamental principle is what we call integrity. Two words when you talk about integrity. So honesty and straightforward. This is basically honesty and what we call straightforward. Honesty and what we call straightforward. So when one is has integrity, is very honest and is straightforward, it shoots the points. Are we together? In all professional and other relationships. But this one is in all professional, and we call it an other relationship. So in all professional and what's called in other relationships. So when one has integrity, this person is basically honest and straightforward. But now in regards to audit, we say in all professional and other relationship together. So a person who has integrity should not be associated with report or information, should not be associated with the report, with what's called a report that's composed of the following together. When an auditor has integrity, then it should basically not be associated with reports that contains the following. Material false or misleading statements. So one is material false, what we call material false, and what's called misleading statement. So it should not be associated if a professional accountant stroke an auditor has what we call integrity. The second, basically contain statement or information contain what we call statement or what we call information, and we call it furnished recklessly, contain information furnished recklessly. And lastly, are we together? Omit information, should not omit. We say omit info, say info required to be included. Omit what's called information that is required to be included, and such omission and such omission, if there is such omission and such omission, would be misleading. And such omission would definitely be misleading. So if you're a straightforward professional accountant or an auditor, then your report should not contain material false or misleading statement, or contain statements or information furnished recklessly, or have an omission. And such omissions are basically misleading. Is that understood? If that is understood, you give Mwalimu yes. You give Mwalimu yes if you're together. Perfect. Then I talk about the next, we call it objectivity. Mwalimu calls it objectivity. So the question is, what do you mean by objectivity? When a person is objective, is fair and not biased. Well, now we talk about fair and we say not biased. Fair and not biased. When a person is objective, is fair and not biased or prejudice. It doesn't prejudice altogether. Or bias or conflict of interest. Or we can talk about conflict. There's no conflict of interest. Conflict of interest. There's not what we call undue influence over others. What we call undue influence. Let's say over others, over what we call others. Undue influence over others, what we call undue influence over others to compromise professional judgment. To compromise what we call professional judgment. Compromise what we exactly call professional judgment. To compromise what we call professional judgment. Together, team, respond to the yes if it can. That is on objectivity, not biased. There are no issues to deal with conflict of interest or compromise or undue influence over others. To do what? Over others, to compromise professional judgment. Are we together? That is what we call objectivity. Then we talk about the next concept, which call the next principle, confidentiality. So when you talk about confidentiality, so what do you mean by confidentiality when you say confidentiality? When Mwalimu says confidentiality, you basically refrain from divulging information. Are we together? Obtained from client. Are we together? You don't disclose information that is basically contained from client, especially when the client has not given you permission to disclose altogether. You don't divulge information obtained from a client to third party without permission of the client. That is what we call confidentiality together. Refraining from divulging, we call it refraining from what we call divulging divulging information obtained we say obtained from professional relationship, obtained from what we call professional relationship, we say to third party without the client permission. Without the client's permission. So that is what's called confidentiality. So information that you obtain from professional work, that is from the client, you should not divulge it to a third party without express permission from the client. However, there's what we call exceptions. There are circumstances, exceptions we say to the above. Exceptions to what we call to the above. However, we say that the circumstances where a professional auditor is allowed, a professional auditor, we say, is essentially allowed to give this information. Are we together? There are circumstances where is allowed to give such information. One, disclosure is authorized by the client. The first scenario is disclosure. We say is authorized by the client. So the first scenario is when that disclosure is essentially authorized by the client. When the disclosure, we say, is authorized by the client. When the disclosure is authorized by the client. So that is one time that is allowed when it's authorized. Giving evidence in a legal proceeding is allowed. Giving what we call evidence in what's called legal proceeding. Giving what's called evidence in a legal proceeding is allowed to give information. We can talk about information required by regulatory authority. So we just call it regulatory authority. So when regulatory authority wants information, then it's allowed to give, i.e., we have the CMA, Capital Markets Authority, we have KRA, etc. In that circumstance, an auditor is basically allowed to give the information which you get. So, but you can also talk about complying with quality control. We talk about complying with what's called quality. We say quality control. To basically comply with what's called the quality control. To basically comply with what's called quality control is allowed to divulge information which given. To comply with technical standards and ethical requirements. To comply, the last one, to comply with what we call technical, and what's called ethical requirement. To comply with what's called the technical and ethical requirements together. So it's allowed to give out information on those circumstances. We respond with the yes if that is understood. If that is understood, we respond with the yes. Perfect. Matters to consider when deciding to disclose confidential information. Matters to consider. To consider, we say in deciding to do what? To disclose what we call confidential information. So what are matters to consider when you're basically making a decision to do what? When you're making a decision, we say to disclose what we call confidential information. As an auditor, when you decide basically to disclose what we call confidential information, what are some of the matters that you basically need to consider? One of the things, even in life, one of the first things is to do relevant facts, whether they're relevant facts and whether these facts are substantial. Are we together? For example, today you want to accuse anybody in this class of anything altogether. Or divulge, just like the scenario that you're talking about, you're divulging what we call confidential information. Number one, is there all relevant facts? Solid facts. Is there relevant facts? And then, and are they substantial? Are they substantial? That's one question. Which can the next, you can ask yourself the type of communication. You can ask issues the type of communication that is expected and to whom should it be addressed to. The type of communication that is expected and to whom it should be addressed to. And you also have to look at whether the interest of all parties, the interest of all parties. Look up, number one is the client. We have that parties would not be harmed if the information is disclosed together. Whether interest of all parties, including that party, would not be harmed if the disclosure is done. Tuko sawa? Respond with the yes, kama tuko pamoja. We respond with the yes, kama tuko pamoja. So we can put them down. Interest of all parties, we call it interest. We say of all parties, i.e., including, we say third party. Interest of all parties, including third party, would not be harmed, if the info is disclosed, if the information, call it information, is disclosed. If the information basically is disclosed, that the interest of all parties, for example, that party would know it, then whether all relevant facts are known, all relevant facts are known and are substantial, are known, and we call it substantial. Whether all relevant facts we understand are known and are substantial. Then say the type of communication, type of what we call communication, we say expected, type of communication expected, and to whom it is to address, and to whom it is, we say to address, and to whom it is basically there to address, and to whom that information basically is to address. Perfect, Steve. Are we together? And to whom that information is basically to address. So then lastly, on confidentiality, I want to basically talk about the importance of what we call confidentiality. I want to talk about importance of what we call confidentiality. So if today in a class you had a friend who is very confidential, what would be the benefit of having a friend who is definitely very confidential? What is one benefit that would accrue? Are we together? So there will be trust between you. So number one, promote trust between the client and the auditor. It promotes what you call trust, and you say between what's called the auditor and the client. So one thing that it does, it basically promotes what's called trust between the auditor and the client. Are we together? Number two, important, it is a fundamental principle. It is what we call a fundamental principle. And when you talk about fundamental principles, this is a requirement for all professional accountants. Together, Lillian, this is a requirement for all professional accountants to uphold what we call, or stock auditors to uphold what we call integrity. So it is what we call a fundamental principle. Are we together? Together. We respond to the yes if there is at all. It is a fundamental principle for all auditors to uphold. Number one is it promotes trust between the auditor and the client. But number three, we can talk about what to say auditor have a legal duty. Auditor the law. This is not touch on the law. Auditors have what we call a duty to maintain what we call confidentiality. To maintain confidentiality. That is, the law basically requires them to maintain what's called confidentiality. to maintain what's called confidentiality. To safeguard, last we can talk about safeguard client secrets. Safeguard what I call the client secret. So if you ask an exam, what is the importance of confidentiality? That is the importance of what we call confidentiality. So then we proceed to the next fundamental principle is what's called professional behavior. Call it the professional behavior. So the next we call it the professional behavior. So whenever we talk about professional behavior, we're basically talking about number one, all accountants must comply with what you call relevant laws and regulations. That's first at the back of our mind. That all professional accountants should definitely comply with all relevant laws and regulation. So avoid actions. We say avoid what you call actions that will disrepute what you call the profession. Avoid actions that will definitely dispute the profession. At the back of your mind, the question is, what are these actions that will basically disrepute, will taint the profession? What are these actions that will basically disrepute what you call the profession? What is these actions that we basically understand would disrepute what you call the profession? When you say actions that basically disrepute the profession, collision, yes, issues to do with collision, or making exaggerated claims, exaggerated claims over services, but you can also make exaggerated claims over what you call over qualifications, over qualifications, when you make exaggerated claims over what you call the services, that would definitely unsuitable comparison to others' work, making what you call suitable comparison to others' work. So these are actions that are not expected from a professional auditor, what they call the accountant. It should basically comply with the laws and regulations and should not take actions that basically disrepute what's called the profession. One of it we said exaggerated claims over services or the qualifications. And we've talked about next, issues to do with collision, but we've also talked about making unsuitable comparison to what we call other people's work. Together on Tito, we respond to the yes if you're together. If we are together, we respond to the yes. Then we have professional competence, college competence, and what's called the due care. Professional competence and what's called the due care. We'll call it the professional competence and what's called due care. So what is professional competence? As a professional accountant, what is expected of you? What should a professional, today you're a professional accountant, what is expected? So, one bit is to maintain what's called skills and what we call knowledge. Is basically to maintain what's called skill and knowledge required to ensure that the client, receive what's called competent. You maintain what's called professional skills and knowledge to ensure that the client basically receive competent professional service, professional service, professional service, and you say based on professional service that is based on current development practice. Current, based on what you call current, we call it development practices. Are we together? So a person who is competent has basically knowledge about the industry. Is that true, Abdul Nasir? When an auditor is very competent, we definitely understand that if an auditor is competent, he will basically have knowledge and skills that will offer what we call competent professional service to the client altogether, based on current practices, but we also have legislation and technology. Practices, technology, based on the technology, and what we call legislation. Offer competent service, competent professional service together. You understand what you're doing as an auditor. Tafadhali bonyeza yes kama tuko pamoja. Bonyeza yes kama tuko pamoja. Perfect. Again, as a professional accountant, competence, you're supposed to act diligently. Acting, we call it diligently. Diligently. It should be acting diligently with application of ethical, with application of what we call ethical and what we call professional standards, with application of what we call ethical and what we call professional standards, with the application of ethical and what we call professional standards together team. So that is done for the fundamental principles. So that is done for the fundamental principles. Together, I want to go to other professional services, what we call other professional guidelines. So fundamental principles, it is done. But how do we remember fundamental principles? What does Mwalimu say? How do you remember the fundamental principle? What is the word to remember fundamental principles? What is the word? OPIC. Nimeshukuru. OPIC. That is how to remember fundamental principle. So I want to go to other professional guidelines, what we call other professional guidelines. What we call other professional guideline. What we call other professional guidelines. So we call it other professional guidelines. We call it other professional guidelines. So on other professional guidelines, I will be talking about obtaining, how do you obtain professional work? I'll be talking about obtaining what we call professional work. How should an auditor or professional accountant basically obtain a professional work? I will be talking about change in professional reappointment, change. I'll just talk about change in what we call professional appointment. As an incoming auditor, there's change of guard. The incumbent is going and you're coming in. How should that be taken? I'll be talking about advertising, what we call advertising, and what's called publicity. Advertising and what's called publicity. How should we carry out advertising and what's called publicity? How should we carry out advertising and publicity? I will talk about independence. And the next, I will talk about other. We call it other ethical issues. What we call other ethical issues. So on other ethical issues, Tim, I will be discussing, for example, how do you need to charge audit fee? Are we together? How do you need to charge audit fee? And what is the danger of charging audit fee in a certain manner? Are we together? That is on other ethical issues. Are we together? On independence, I will talk about aspects of independence and threats to independence altogether. On advertisement altogether, I'm going to talk about how should advertisement be carried out by audit firms. Then we will talk about change in professional appointment. A new auditor is coming in, a nominee is coming in, and there was an incumbent. How do you go about it? Then the first step is start with obtaining what we call professional work. So we start with the first one that we call obtaining. Obtaining, we call it obtaining what we call professional work. We start with that one, obtaining what we call professional work. As an auditor, how should I obtain professional work? So the key one is that as an auditor, you should not basically obtain audit work or professional work in what we call unprofessional way. Unprofessional way. What is an unprofessional way? That as a professional auditor, you should not basically get to office in an unprofessional way. Are we together? Are we together? So paying any fee or rewarding the third party. This will be paying any fee or rewarding what you call the third party. This is unprofessional. Are we together? Then in order for me to gain a professional work, I should not basically gain it through unprofessional way. Are we together? To introduce you to a client, third party to introduce you to clients, to introduce you to what we call a client. For ground, how are things on the ground? How are things on ground? How are things on ground? Vitu ni tofauti. Kazi ni kujuana, but we think professionally, and I believe that you're going to uphold these values. When now you become auditors, Lizzie, I believe that you're going to be amazing people. I believe that you're going to make better decisions when it comes to you getting professional work, that you're going to do it in a professional manner. Are you going to embrace those values? Are you going to maintain professionalism? I hope so. So we get to the next change in professional reappointment. Change in what's called professional reappointment. So we start with the first one. We go to the next, change in professional. The second is change in what we call professional, and we call it reappointment. Change in what's called professional reappointment. As an audit nominee, a member of practice who is nominated an auditor, what should they do? Number one, if you're nominated to be the auditor, what is the first thing that you need to do? What is the first thing that you need to do? Abdina said, if you're nominated, are we together? What should you do? What is the first thing that you should do as an auditor? Should you just go to the office and begin work? What should you do if you're nominated as an auditor? To date, what should you do? Seek permission to speak to the president. Seek permission. We just make a provision. Seek permission. Number one, to speak, to communicate. We don't need to write speak now, to communicate. To what we call to the predecessor. So that is the first thing that you need to do. And as you make this request to speak to the predecessor, we're saying that the client, who are you seeking permission from the client? So there are two things that can happen. The client can accept or reject. Are we together? So one, we can have one option, accept, and reject. So when the client accepts, what will happen? We will move to the second step altogether. If the client reject or refuse to give permission, what should you? Refuse to give permission. To give what's called permission. To give permission. As a new auditor, you're saying your first assignment is basically to seek permission from the client to communicate to the predecessor. The client can accept and the client can reject. So in an instance where a client has rejected your request to speak to the predecessor, what should you do? What should you do, Nyokabi? Because you don't understand the business, you could be getting into things that you don't know. So if the client refuses, if the client will say he refuses to give you permission, if the client refuses to give you permission, you say we reject the appointment. We reject what's called appointment. Are we together? Appointment. As a professional, yes, you reject the appointment. I know for ground vitally tofauti, you reject appointment. Peter, would you want to accept something that will put you to jail? You want to get into things that at the end of the day. So as a professional accountant, if that permission is not granted, you reject what's called the appointment. Are we together? Together. So the second, we know that if the permission granted, we say permission granted, we have permission. The second step, we have permission granted. If the permission is basically granted, if the permission, we say, is granted, one thing that should happen if the permission is granted, nominee should request, nominee should request what's called the predecessor, should basically request what's called the predecessor auditor. Auditor, we say in writing, should basically request what we call the predecessor auditor in writing for all information, for all info that should be made known to him, that we say should be made, and say known to him, should be made known to him. For all information that we basically understand should be made known to him. Should do it in writing and say for all information that we say should be made known to him. Together. So when that happens, number 3, what do you think should happen? A predecessor is an auditor who was there before, who is living. That is a predecessor. Remember, when you're coming in, there was an auditor who was in place. That is the person that we call the predecessor. Fiona Tumeleona, that is the person that we call the predecessor. Fiona Naitaji, yes, if we are together. Fiona, out. Thank you so much. So 2 things that are going to happen, 2 things are going to happen now with the predecessor. You've done this formally, that is in writing. Shadrach, it's been a long time. Hope you're okay. You've done that in writing to the predecessor auditor. 2 things can happen, there could be a trap here. 2 things can happen. You've done it in writing. The predecessor, when he gets your request, are we together? When he gets your request from the nominee, this person does not just divulge information. He also seeks permission. Permission, we'll say from the client. Once that information, we're saying that information, your request has been made known to the predecessor. The predecessor also seeks permission from the client. from the client altogether. To communicate, are we together? To communicate with the nominee freely regarding the affairs altogether. Regarding the fair. So the client in this case, client can agree, or a client can disagree. That's why even in this place there could be trouble. So seeks permission from the client to speak freely with the incoming auditor or the nominee. So I want to talk about this in cases where now the client tells the predecessor, don't give any information. As an auditor, what do you do? What happens if the permission is not granted? So if the permission is granted, then the predecessor will just open the files to you and explain to you the position, what needs to be known. Are we together? However, if the predecessor disagrees, what should you do as a nominee who is supposed to sit in that office? If he refuses, if the permission is not granted, reject the appointment. If the permission, we say is not granted, reject what call. Peter is saying, Mwalimu, how do you reject a job? Reject what's called the appointment. So at this level, if the permission is not given to the predecessor to give you all the information that is required, then you need to reject what's called the appointment. You could be set up. Are we together? This could be a setup. Together. Is that understood? If that is understood, we respond with a yes. We respond with a yes. Yes. So then you go to advertising and publicity. What we call advertising and publicity. Advertising and what you call publicity. Advertising and publicity. As a professional accountant, are you allowed to advertise your services directly to the client? Are you allowed to advertise your services directly to the client? You're not allowed to advertise your services directly to the client. So as a professional accountant, you're not allowed to advertise your services directly to the client. And the logic behind it, are we together? It basically complies to what's called fundamental principles. So you should not advertise professional accountants. Accountants should not, we call it advertise, what we call services directly. We say directly to what we call to a client. To client, as this would compromise what we call the fundamental principles. Fundamental principles, e.g. integrity. E.g. integrity. As that would basically compromise what we call fundamental principles, for example, integrity. Together, who is lazy? Who is lazy? I don't know that student of mine. Who is that lazy? Do I know lazy? I hope is our student for this class. So as that would basically compromise what's called the fundamental. Are we together? But we say a member in practice can, however, place advertisement. A member in practice, we understand that can place what we call advertisement can place what you call advertisement. You say when can a member in practice place advertisement? When can they place advertisement? So one is when they're acting on behalf of the client. They can only place when they're acting. We call it acting on behalf of what you call a client. They can place what you call advertisement. Flow, are we together? When they're acting, Fiona, on behalf of a client, are we together? They can place advertisement together. They can also place advertisement when they're seeking for staff. We can say seeking for what we call for staff. Seeking for what we call staff. They can place advertisement. Seeking for what we call staff. Seeking for staff. Then we can also talk about seeking for what we call subcontractual work. Seeking for what we call subcontractual contractual work. When they're seeking for what we call subcontractual work together. In those circumstances, you said that's okay. So in this case, a member in practice can place advertisement when acting on behalf of client, when seeking for staff, or seeking for what we call seeking for staff. Those to work for him. Are we together? I've said seeking for those to work for him. Fiona Tukosawa. Seeking for staff, those to work for him. I hope your net becomes better. We're still not yet going for break. We still have paid announcements. We basically say that paid announcements, something that's seeking for what we call subcontractual work. We say seeking for subcontractual. I've said seeking for what we call subcontractual work. Sawa, seeking for what we call subcontractual work. Is that okay? Seeking for what we call subcontractual work. Seeking for what we call subcontractual work. Thank you. I want to talk about paid announcement. So paid announcements in media, we say is permitted in the following. We call it circumstances. In the following circumstances. So what we call paid announcements that are done in media is essentially permitted in the following circumstances. So paid announcements that are basically done in media is essentially permitted in the following circumstances. One of the first circumstances is when opening of a new office. Call it opening of what we call of a new office. Opening of what we call a new office. Opening of what we call a new office. Change the name or address of the firm. Change in name, or what we call address of what we call the firm. Change in the name or what we call address of the firm. A paid announcement is allowed. We have change in membership of audit firm. Change, we call it in membership of what we call of audit firm. Change in what's called membership of the audit firm. Change in membership of audit firm. Then we can also talk about it's allowed appointment of a new member. Appointment, and this was you can always see in the newspaper. Appointment, they can be done. Those can appointment of what we call a new member. So paid announcement is allowed in this appointment of a new member, change in membership of audit firm, change in name, address of the firm, and then we have what we call opening of a new office. Together, team. if that is together with us, we respond to this. So that is paid announcements are basically allowed in those circumstances. Give me a yes if you're together. You provide me yes with a yes if you're together. Perfect. Then when I want to talk about independence, we move to independence. So we've done obtaining professional work, we've talked about publicity. So we move to what we call independence. Independence. We move to what we call independence. Independence. What we call independence. So what is independence? When somebody tells you independence. So in the definition of an auditor, this word appears. Independent, the word independence. Even the definition of audit, we have the word an independent external auditor. So why is this word powerful? Why is this word powerful? Even in the definition of auditing, we have what's called independence. Independence is something very powerful. So we say it is an essential attitude. Essential attitude. We call it essential. We call it attitude. It's an essential attitude. We call it essential attitude. Characterized, we say by what we call integrity. Integrity. We have objectivity. Characterized by integrity. We have objectivity, and what we call professional skepticism. Skepticism. Characterized by what we know what integrity is, straightforward and honest. We know what objectivity, you're not biased. Are we together? But I'm introducing the word professional skepticism in approach of professional work. In approach of what we call professional work. So this one, professional skepticism. What is professional skepticism? When somebody says professional skepticism, Abdina said. So essential attitude characteristics, that attitude we have integrity, we have objectivity, and then we have what calls professional skepticism. So the one, what is professional skepticism? Peter, you can be asked this and told elements of professional skepticism. In an exam, you can be asked, what is professional skepticism and what are features to elements? Yes, there's critics of it together, but you say those aspects are there, but you're saying attitude of questioning mind is just attitude, we call it attitude of what you call questioning mind. You have it, questioning mind, an attitude of questioning mind, assessment of evidence, call it assessment of what we call evidence, assessment of evidence, attitude of questioning mind, assessment of evidence, and auditor, assessment of evidence, and alertness to possible misstatement. We call it an alertness, to call it to possibility of what we call misstatement. Together. So that when you talk about professional skepticism, an attitude of questioning mind, assessment of evidence, and alertness to the possibility of misstatement together. Are we together? Alertness to the possibility of what you call misstatement or possible misstatement. That is skepticism. So there can be a question. You can be told features. You can be asked features. So elements of what we call professional professional skepticism. Features, to what we call elements of professional skepticism. You can be asked about features, to what we call elements of professional skepticism. So we talk about one of it, questioning mind. We have it as questioning mind. Questioning mind. Critical assessment. Assessment. Critical assessment. Alertness to contradiction. We call it contradictions. Alertness to the contradiction. And then we have independence of thought. Who has ever seen this question as a revised audit? Nani ameona hii swali? Who has seen that question? Abdi Nasser, have you seen this question? You ask what is professional, what is professional skepticism, and elements of professional skepticism. Nice. At least, who has ever come across that? Yes, it's there. So that is what calls professional skepticism. But then back to independence. I say that independence carries what you call professional skepticism. It carries integrity and it carries objectivity. Are we together? But I want to say that independence is basically exercised. Independence is essentially exercised, we say, at two levels. Is exercised at two levels. When you talk about independence, we say it is exercised at two levels. So one is what we call independence of mind. Independence of what I call mind. The first one is what we call independence of mind. The next is what we call independence. We call it the independence of what we call of appearance. So we have what we call independence of mind, and then we have what we call independence of appearance. So I want to start with the first one, the two levels of independence altogether. So I've said that independence are essentially exercised at two levels. One of the first level is independence of mind. The other is what we call independence of what we call appearance. So we start with what we call independence of mind. We start with what's called independence of mind. We call it independence of mind. Independence of what we call mind. I hope there's nobody wants a break. Kuna mtu anahitaji break? If you need it, tell me now. If you need it, yes, get it now. I can go and go. So we can get it now. How many minutes? How many minutes break? How many minutes break? So that that's okay. 10 will be okay, Tom. Just have it. So I want to talk about independence of mind. When you talk about what you call independence of mind, is a state. We call it a state that permits. A state that permits. A state. We say state that we say permit what's called expression. We call it expression of what we call conclusion without expression of conclusion without is a state that basically express a state that permits expression of what we call conclusion without being affected, without, call it without being, call it being affected. We say without being affected. We call it without being affected. Affected, without being influenced. Without being influenced. We call it without being influenced. Without being influenced. Without being influenced. With compromise. With compromise. Compromise. Without influence, but with compromise. We call it without influence. Without influence, that compromise. We call it without influence, that we say compromise. Is a state that basically permit or allows expression of conclusion without influence that compromise. Without influence that compromise. Auditors' professional judgments. Auditors, we call it professional judgment. That is what we call independence of mind. So it is what we call expression of opinion or conclusion without what we call influence that will compromise what we call the auditor's judgment altogether. Auditor judgment that will basically compromise what we call auditor's judgment. So when you say compromise auditor judgment, we basically mean that auditor is basically going to do what? Is not going to act with integrity. Auditor is not going to act with objectivity and professional skepticism. So if you have a state of mind that permit expression of conclusion or the end without influence that compromise auditor's professional judgment in terms of does not influence his integrity, does not influence his objectivity, and does not influence what we call the professional skepticism, that is what we call independence of mind. Together, team. Then we have the next what we call independence of appearance. We call it independence of what we call appearance. We call it independence of appearance. We call it independence of appearance. Is independence of mind understood? Is independence of mind understood, Doris? Is a state that permits, I'll say, auditor's conclusion without influence that compromise auditor's judgment. In terms of auditor is not able to act in integrity, auditor is not able to act objectively, and auditor is not able to do what? Is not able to apply professional skepticism. On the other hand, when you talk about independence of appearance, avoidance of facts. This was talked about avoidance. We call it avoidance of what we call facts. We call it avoidance of facts that causes a reasonable third party that we say causes what we call a reasonable third party. So that is what we call avoidance of fact that causes a reasonable third party to suspect. We call it to suspect. We say to suspect to what we call conclude. To suspect to what we call conclude. Avoidance of fact that can basically cause a third party to suspect or conclude that auditors, that we say auditors, and we have it integrity. We have objectivity, and skepticism has been compromised, and professional skepticism, we say, has been compromised. So avoidance of fact that will cause a third party, basically to think that auditors' integrity, objectivity, and professional skepticism has been compromised. Together, team. We respond with a yes. So then we move to the next. Threats to auditors' independence. So what we call to threats to auditors' independence. Threats to what we call auditors' independence. We call it threat to what we call to auditors' independence. and threats to auditors' independence and compliance to fundamental principles. And what we call compliance to what we call to fundamental principles. So threats to auditors' independence and compliance to fundamental principles. Threats to auditors' independence and fundamental principles. So this one is basically divided into 5 categories. So how do I master this 5 category? How do I master this 5 category? In audit, those threats to auditors' independence and fundamental principles, we call it. In audit, abbreviation is ASIF. Master that at the back of the mind. The abbreviation, we call it ASIF. Tumeelewa hiyo? We respond with a yes. Yes, the word is ASIF. We are making it easier. Abdi Nasir, we call it ASIF. So I break it down. A stands for what we call advocacy threat. S stands for self-interest threat. S stands for self-review threat. I stand for what we call intimidation threat. And F stands for what we call familiarity threat. What we call the familiarity threat. Together, F stands for what's called familiarity threat. Is it easier to master it that way? Is it easier? Shadrach, is it easy to master that way? ASIF. Advocacy threat, self-interest threat, we have self-review, we have intimidation, and then we have what's called familiarity threat. Fiona, is it much easier to understand it that way? I hope it's easier to understand it that way. Yes, I want to start with the first one, what we call the self-interest threat. We call it the self-interest threat. Self-interest threat. So whenever we talk about self-interest threat, I want to talk about how it basically arises. How does self-interest threat basically arise? How does it arise? This basically arises as a result of auditor acting on his own interest. Arise, we say as a result of an auditor, we call it acting on its own interest. So how does it emanate? We say that the self-interest threat emanates as a result of an auditor acting on his own interest. Then there's a question that I asked some people somewhere. If you had an option, one of you in this class, Liz, to save Mwalimu or save yourself, who are you going to save? If you had an option to save Mwalimu and to save yourself, who are you going to save first? Lizzie, who are you going to save? Yes, of course. So we say that the self-interest threat emanates as a result of auditor acting on his own self-interest. Yes, as a result of auditor acting on his self-interest. So whenever we talk about self-interest, whenever we talk about self-interest, it captures a number of things, Self-interest captures a number of things. It captures emotions, One of the things, interest is emotions, It captures your emotions. Interest could also capture what's called financial. and we call it other personal interest. What we call other personal interests together. If I was to if I was to give, we say 100 million, we say 100 million down here. We put 100 million for an auditor, vis-a-vis the quality of an audit. What would you go for? Would you compromise? Would you forego 100 million and make sure that an audit report is quality? What did you go for? $100 million. So under self-interest, auditor will favor this as opposed to what they call quality audit. So auditor will basically focus on this, the self-interest that could be emotional, financial, and other personal interests at the expense of what we call quality audit, at the expense of the quality audit. That is what an auditor will do. That an auditor would basically favor personal interest that could be emotional, financial, or other personal interest, as opposed to what we call quality audit. Are we together? As opposed to quality audit. I break it examples, I can break this to examples. I can break that to example. I hope you're recording. There are people who are going to feed on the video. I hope we are recording, as opposed to what we call quality audit. So what are these things, that an auditor would make an auditor just to compromise a quality audit and go and do those stuff? So one with a relationship with auditing. Relationship with auditing. Relationship. We can talk about relationship. Relationship with an auditing. If you're auditing your wife's premise, or you're auditing as a lady, you're auditing your husband's business, which will come first? With auditing, it can create what we call self-interest, because this one comes with finances. Are we together? Finances are together, especially when there's finances. Are we together? Relations are together. But especially when those relationships are tied to finances are together, there's money that is coming that would override what's called a quality audit. Quality audit. That would definitely override what's called a quality audit together. So financial interest, are we together? If you own a stock, if you own a stock in a company and you're an auditor, sometimes your financial interest, we understand that your financial interest could definitely override what's called quality audit together. So employment relationship exists between auditor spouse, and auditee. Auditors relationship, employment relationship. We have employment relationship between auditors, we call it auditor spouse, and what you call, and auditor spouse and auditee, auditees. So that will lead to what we call self-interest rate. Is it understood perfectly well? Tumeelewana kabisa? Can you say that you have understood what Mwalimu is saying perfectly well? Have you understood what Mwalimu is saying perfectly well? Nipatie yes kama tuko pamoja. Thank you so much. So example, circumstances that create self-interest, threat, circumstances, we call it circumstances. Circumstances that we say that creates what we call self-interest threat. Circumstances that we basically say create self-interest threat. Circumstances that create self-interest threat for a professional accountant in practice. For what we call for a professional accountant in practice. For a professional accountant in practice. I want you to put for me those things there. Lazy, I want you to put that for me there. I want you to put that. What are those circumstances? Put them. Based on our discussion, put them there. Based on our discussion, I want you to put them there. Based on our discussion. Based on our discussion. So, number one, a firm being concerned about possibility of losing a potential client. A firm being concerned about a possibility of what they call losing a client. Are we together? A firm definitely being concerned about possibility of losing a client. You know, if this client specifically gives 80% of revenue comes from a single client, so that is that would bring self-interest. A firm being concerned with the possibility of losing a client. Then you say a member of assurance team, we have a member of what we call assurance team, a member that is of assurance team, a member of assurance team having direct financial interest, having what's called a direct financial interest, having what's called a direct financial interest in the assurance client, assurance client. That is interest. So we give 5. A potential of losing, 1, being concerned about losing, possibility of losing a client. If that client's 80% of your revenue comes from a client, you are an assurance team, but you have a direct influence in the assurance client. That creates a self-interest time. Then you say a firm undue dependence on total fee from clients. Undue dependency. We call it dependence on what we call the total fee. On the total fee, we call it of the client. Undue dependence on the total fee of the client. Undue dependence, you depend on that. Then you can talk about a member of audit team entering an employment negotiation with audit client. A member of audit team entering into what we call employment negotiation. We call it with what we call the client. So a member of audit team enter into negotiation with the client, employment negotiation. You lose your power. Do you think you have power over the client? Do you think you have a power over a client when you enter employment negotiation? Then contingent fee arrangement. We have what's called contingent. When you're discussing contingent fee arrangement. This creates what you call self-interest. So when we'll be talking about how an auditor basically charge fee, we say that whenever we talk about contingent fee, a fee is tied to something, your fee is tied to the kind of report that you give. So that will create what's called self-interest, right? So the 5 that Mwalimu has discussed, can we all say that we have understood? Can you say that we have understood? Tafadhali? Can we say that we have understood? Tafadhali? Thank you, Peter. Audit is so interesting. especially if you apply these things. If you can apply these things, and very highly applicable. So then I go to what we call self-review. I proceed to what we call self-review. Self-review. Threat. Self-review threat. Self-review threats. But before that, how do I address this? How do I address self-interest threat? Threats. Before I go to review, how do I address? So how do you address to solve? How would you address this to solve? How do you address this? So how would you address this? If you have your self-interest, how would you address? So one of the ways to address is disclosure. Disclosure. You disclose that have a business relationship. My wife works in that company that you are auditing. So one of the solutions is disclosure. Together. Disclosure. You disclose. Shedi tuko pamoja. One of the ways to solve the issue is to basically disclose. How do I solve issues to do with self-interest threat? Mwalimu say that one of the ways that we basically solve what we call the self-interest threat is one we call disclosure. Abdi Nasir, are we together? We call it disclosure. One of the ways to address it is basically what we call disclosure of factual information during engagement. So during engagement, you disclose that this is my wife and the ODT works together during engagement. But again, if you realize that there's so much interest that you have, you don't want to disengage with the client. We call it disengage. You can disengage. So that is how to eliminate what we call the self-interest threat. Together. So disclosure of the factual information, but again also disengaging. Are we together? Disengaging. You stop engagement. So then we proceed to what we call self-review. So what is a self-review? You review your own work. Auditor reviewing their own work. Auditor reviewing what we call their own work. You are the accountant and now you are the auditor. Their own work. Can you review your own work? Can you report yourself? Abdi Nasir, can you review your own work? You're the one who's the accountant and you're the one who's carrying an audit. When you notice you did something wrong, what will happen? You'll automatically not disclose it. Auditors reviewing their own work or work done by others in the firm. Or work, say work done by what's called by others in the firm. Do you think they will disclose anomalies that are basically detected? They cannot disclose anomalies that are detected altogether. How do you disrepute your firm? You will not altogether. It may be difficult to evaluate without bias. Yes, you definitely be biased. The danger of this is that you definitely be what's called biased. That is the danger of it, is that you're likely to be, in most cases, biased. You're likely to be, in most cases, biased. In most cases, you're likely to be biased when you do that. Together, team. So I want us to stop at that point. We wish would have gone and gone, but we will finish this. I want you people to go through the handout so that when we meet next, we just go through it very fast. We just summarize what we have and move to the next. Together, team. I wish would have even gone more. Nobody has even left. Guys are still in class as you are. I wish would have even done more, but our time So you can go through the handout. We'll summarize in our next session, move on to the next. Get the team. We move on to the next. So God bless you and God bless our class. They're there. They're already there. If you're in class, they're already there. The notes were given way before. Is it true, Representative? Nasir, they're already there. Yes. Thank you so much.